Welcome to StockMarketPending.com. What we're going to show here is Google weekly chart and what the bullish case is. And here it is. As we own Google down here at these bottoms, we clearly stated to Peter Brady and everyone in our group that that was a very weekly low reading. Even though we got back above the 200 week over here and failed, it's because of the earnings report that they gave. Since that big gap down and down week, we've come all the way back up to that very green line, which equals 200 week moving average. The 10-week moving average within the lower volume market, for the participants that here, the thing that you want to know is how these things change or turn around. Now with the falling 10 week, as long as it's been, it's the first time since the correction, and I'll take out this diagonal trend line for a moment. That blue line is called a 10 week, and it crossed over the 20 and the 40 and the 50, all of it. But here's the thing, since its decline, for the first time it's going to level out and is no longer descending. That's the 10-week moving average. And the 10-week moving average right now happens to be at 477.1320 is the reading. The weekly percent DS, where this bottom is put, has gone from 13.58% to 15.93%. During the earnings, it stayed down here in the range, but since that weekly move off the bottom and a weekly follow through, is that now the weekly percent DS is at 25.45. That's bullish, because when the percent DS is ascending in value, that is where you start to get a sustainable price support bottom, and as it advances, this increases, the momentum increases, and everything is setting up. This line right here, this color line right here, is called a 100-week moving average. It's very important to know that the buyer step coming in right here. So for the first time of its downtrend is where that 10-week moving average started to descend right over here, and it flattened out for a while, which gave it support. But the minute that it broke below it and it started to go down again is what happened. Now we're coming back to one of those very junctures right here again, just as I showed you there, and we're starting to flatten out. But we also flattened out here for a period of time, and we will know here that if we could maintain a closing price above the 200-week moving average, and I'm going to give you the price of that 200-week moving average, and it's 487.0018. That's the 200-week. Now, technically, so you know, we closed at 490.06, which just so happens to be above that 200-week moving average right now. And here's the reading, 487. You're $3 above a major 200-week moving average. Knowing that the 10-week moving average is at 477.13, which is about 10 points or so, a little more in there, below the 200-week. The support level now will always become the 10-week, which is right there. What we will want to see here in the following week is that 10-week, the previous week right here, the 10-week moving average was at 478. Now it's at 477, but it's flattening out. The upcoming week is that the 10-week advances, called ascending, going up in value, and take out that last week of 478 and goes higher. That will also take up the 200 week. Part of what people need to understand is that the 200 week moving average did never, and where's the most weighting in a trend is that weekly. Notice that the weekly was ascending in value. It was not going down in value like the 10 week. 10 weeks is only 10 weeks moving average. 200 is 200 weeks of open, high, low, close, price, and volume. Okay. Now, the other thing that we like is that when we look at the MACD, a reading, is the last peak of this MACD, the prior week, right here, hit 20.74. What we would like you to know is that when the MACD here is at a lower value than the previous week, that also is providing good, strong current support level for the equity. Because when this will deteriorate and go down in value, you don't want this to keep going higher in value, because if it does, then that means that this move would fail. And that part of the formulas that we use and create here, we create thousands of them, but this just so happens to be one, is that these blue bars are called the moving average convergence divergence. Another thing I would like to tell you is that percent DS and percent DA is at your 5 basis points above. That's a crossover. That's another thing that you want to know about this nice trend that's trying to develop. So there's lots of bullish events within the structure of your MACD, your 200 week, your 10 week, your CCI is working on a weekly level, where during that